A new company plans to invest in short-term U.S. government bonds using the Ethereum blockchain as a secondary record-keeping tool. Joining us now to discuss is Superstate CEO Robert Leshner. Welcome to the show, Robert.
Excited to be here.
We are excited to have you here. Tell us about how this is going to work.
Great question. So the way this is going to work is that we've created a new company, Superstate, and Superstate is an investment manager. And what we're going to be creating are mutual funds, which are a very straightforward and, simple investment structure. And those mutual funds are going to be purchasing government bonds. And the shares of these mutual funds are going to be able to be recorded on Ethereum as well as in a traditional ledger. And the advantage of this is that crypto native investors, whether they're hedge funds, venture capital firms, professionals, will be able to store a record of their ownership alongside their crypto investments in whatever custodian they're already using for crypto investments or record keeping systems they're already using, whether it's self-custody or another system. And so if you're a crypto native investor, in addition to having crypto native assets like Ether, Bitcoin, et cetera, you're going to be able to have traditional assets in the same technology stack. And we believe that this creates advantages because they're going to be able to access investments that they don't already hold in their portfolio. And over time, the goal is that crypto native investors are going to be using real world assets such as a Superstate fund in replacement for certain other crypto issued assets like stablecoins. And that over time, these funds can really be a settlement, trading, and base layer for crypto economies.
This sounds like a lot of regulations, that it touches on a lot of regulations, and I'm wondering how prepared are you to deal with it? In other words, from what it sounds like, you have the transactions themselves, they're occurring on blockchain, but then recorded in the centralized database as well as on the blockchain, correct? And then you also have questions about custodianship, et cetera. So how are each of these aspects addressed? We're seeing the SEC has a particular interest, or they're quite enthusiastic, shall we say, about enforcing a lot of this. So how are you addressing so many of these concerns here?
That's a great question. So, the first thing to understand is that these are registered and regulated products. So on Monday of last week, we filed a preliminary prospectus with the SEC to create the Superstate Short-Term Government Bond Fund. And, this is the structure for this product. Obviously, there's going to be a discussion process with regulators as they get to understand the product before it can go live. So that's the first piece. The second piece is that, this is an intermediate step along the way to, a full decentralization of, custody, record keeping, and settlement. When we're creating this fund, we're actually not using the blockchain as the primary source of records. A traditional SEC registered transfer agent is going to be the source of truth. And the blockchain is a supplement to that. So far there haven't been any products that they've approved that fully rely on on-chain record keeping and settlement. And I think it's going to be a number of years potentially before, Superstate or any other, fund manager is able to use the blockchain in a regulated product as the primary source of truth. There's still an SEC registered transfer agent at the heart of this, and that creates inefficiencies, right? You basically have a TradFi record keeping process and the blockchain record keeping process. The real efficiencies come in the future when you have just an on-chain record keeping process. And I think, at that future state for the industry, you're going to see a lot of operational efficiencies. You're going to see, these assets when they're issued on chain, moving fast, quick, and accurately. And we'll get there eventually, but it's right now a two-step process.
I mean, it will get there eventually. It's the Messiah will come too eventually. This is the question of how long? What's your timeline here in getting this implemented? And are you concerned at all that, as so many people have been, that in working with the SEC, you open yourself up to being punished by the SEC, if you will?
Yeah, it's a great question. So we would like ideally to be live by the end of this year. Going into the SEC, we're going in with exactly the type of product that, they should be excited about, which is, someone filling out the form on the website, so to speak, creating a product, working with, top tier service providers at every aspect of the fund, and creating a product that should exist. Right now, a lot of the products in crypto are not necessarily like healthy for the user. Stablecoins are a great example. Stablecoins burn a hole in the pocket of anyone holding them because the user earns 0% and the sponsor keeps 100% of the interest underlying the product. It's not a healthy product. What we're creating is an incredibly healthy product for the shareholders of it. The shareholders are keeping all of the return potential of the assets in the fund, and it's being done in a way that should be technology neutral. We're using, a new platform to power pieces of the technology, but not innovating on the fund itself, what it holds, or the, returns or risks for the shareholders. And so, long term, I think this is something that, the SEC is going to be incredibly excited about as more and more fund managers build, on-chain assets. And it's hopefully done in a way in which it takes the best aspects of the blockchain with the best parts of traditional investments. Eventually we're going to have the blockchain's, speed, transparency, accuracy, automation, and composability, which are all things that any regulator should be excited about, with, a very, straightforward fund management process that doesn't add risks for what are you buying, how are you holding it, how is it monitored, how is it regulated, how is it compliant.
Robert, we're going to have to leave it there. Thanks so much for joining the show.
Thanks.
That was Superstate CEO Robert Leshner.